Do you still think there's a big disconnect? NASDAQ down 20-odd%, bear markets in oil. Is there a disconnect? Have we further pain to go?
I think until we know how this completely unfolds, you have to radically change the asset allocation mix. Certainly in fixed income, it makes sense to raise the level of cash first of all, but you can't do that forever since cash is not really paying anything. We like the idea of T-bills, treasury bonds, that there is some return, and people will remember 5 to 10-year bonds in emerging markets were giving 2-odd% just a couple of years ago.
It's interesting, Steve Bryce was with me just an hour ago from Standard Chartered. He wanted to pick up some yuan and he wanted some Chinese government bonds as his hedge in this current dislocated environment. For you, it's pure US sovereign risk, or would you want tips in there? How would you balance that shift in the portfolio?
Yeah, I think the treasury bills and T-bond trades are more a sort of 6 months, 9 months idea, rather than sort of saying you've got a permanent shift in allocation. At some point, the markets will look cheap, and we've said this on a couple of occasions, but where does this crisis go to? And that would be the point, really, to relook at it again.
Which takes us to what happens this evening. We have the Fed. How important is it that Jerome Powell gets optionality and not a hawkish hike?
25 basis points baked in. The market's obviously timing how many more we're going to have. He will probably want to say that while he remains committed to being not behind the curve, as the market suggests, but at the same time really seeing how the crisis plays out, and reserves the right to change that option at some point.
But the market has 7 hikes priced in. Inflation on the input side is at what, plus 0.9%, so it annualized at 10%. 10% input side. The debate is to do 7 could invoke a recession, a hard landing. Is that the balancing act between how much of a recession are they prepared to tolerate to tame inflation?
It's a tricky time for him, and I think he will want to obviously curb inflation with those rate hikes. Whether we get 7 remains to be seen. If the crisis becomes more protracted and it starts affecting growth, it will be a lot less.
So we're talking about the Fed. The power of the Fed is nothing to the Chinese state. The Chinese state is now vowing, the Chinese State Council, breaking news headline for you at this hour as it goes, 9:20. The Chinese State Council vows to keep the stock market stable. This is the Xinhua news agency. Now, the Hong Kong Hang Seng Index is up 4%. Let's have a look at some of the Chinese stocks, because you got HS Tech rallying by over 6%. That's a story that we've had in the past couple of hours. So this is intervention on a grand scale. More of this to come. When these moments come, and you've lived through many of them, do they endure? Is the state army coming to buy the market enough to convince you to buy Chinese stocks?
It's a central bank exercise, effectively, and support measures will be coming in whichever central bank needs to act. We are in unprecedented times. It's been a long, long time since we've been in this situation. And the Chinese won't be the first. We will see action elsewhere if this is to continue the way it does.
How much more? I mean, we didn't get an MLF cut yesterday. Some people are saying that there will be more stimulus from the Chinese. What kind of stimulus, apart from stock buying to steady the market, do you think we'll get?
Well, we saw action on the property market. I think really if we see more of a monetary shift, then probably that will signal to the world that the emerging markets can take as much action as developed markets. The focus has obviously been on what the Fed's going to do, but other central banks will wade in, as we've said. Do
you think inflation's becoming unhinged? I mean, that's one of the phrases in the stories this morning. We look at all the inflation expectations 1 year out, and they're all over 5%. As I say, PPI is at 10%. Is unhinged and unmoored part of the narrative for you?
It's gone from transitory to stubborn. If we get these price shocks continuing, it will begin to look unhinged, and the central banks will have to take more concerted intervention and interaction. But I think at the same time, price pressures will ease eventually. We're not in a permanent state of flux. But really, if we are in this crisis situation, it's going to have a major impact going forward.
The other narrative from the Bank of America survey is about whether we capitulated or not. You know, I said to you, NASDAQ's down, it's in a bear market. I mean, the superlatives are endless in that regard. But Bank of America, there's been this move into cash, which chimes with you, which is T-bills. I mean, they're almost symbiotic, aren't they? It's the highest since 2020, but equities have not capitulated yet, but it is about the growth and recessionary fears. From what you've seen in these markets, do you think we've capitulated?
Well, Treasury Secretary Janet Yellen doesn't think there's going to be a recession. It'll be interesting to see how the statement from the Fed comes out.
Okay.
We are in a situation where there is going to be a slowdown. Growth will be crimped. I think we're going to get very, very close to what will be worrisome in terms of much lower growth later in the year, but not quite to recessionary levels unless we really get a complete escalation